Hello, investors and traders. This video will explain a winning strategy using the CCI indicator. The strategy combines other indicators with the CCI to give a rule-based strategy. This video will not go over the basics of the CCI or definitions, but will build a strategy that will take away the uncertainty of investing or trading. In my own personal hedge fund, I built over 50 indicators to build a weight of evidence. These are some of the indicators. So you know the catchphrase: study it, analyze it, adapt it. Insight Strategy 1. The overall strategy is taking the multi-year, yearly, or low to high levels of the CCI and combining this indicator with a MACD, disregarding all signals which are against the overall trend of the market. The exit plan is a swing trading oscillator, but letting the winners run. Our risk management is implementing a stop loss. CCI indicator combined with the MACD. Rule 1. Follow a top-down approach. The top-down approach to investing focuses on the big picture or how the overall market is trending. If the overall market is doing well, chances are the CCI strategy combined with MACD will also do well. What's the trend of the market? If it's negative, you'll want to do very little, if any, buying. Even if you see some stocks breaking out, your probabilities of success are quite low when the market trend is going against you. On the other hand, if the market is doing well, this combination of indicators back tested has amazing results. For this case study, we will assume the overall market is bullish. But remember, we could be in a bear market. If in a bear market, use the opposite rules in this video. Rule 2. Commodity channel index indicator drops to lower levels, yearly lows, or multiple year lows. If we wait for a CCI reading that falls to a recent low, then we are going to look for a reversal trade in the opposite direction. Just because it fell to a recent low, or a multi-year low, or an extreme low, does not mean we buy, but it is an indication we could buy soon if other factors happen. So the CCI is the get ready to buy signal. So if the CCI falls to low levels, multi-year lows, or lower lows, then we proceed to Rule 3. Rule 3, MACD buy signal. MACD is more of an oscillator identifying key turning points. It does an excellent job at high points and lower points, but does not do a good job in a narrow range. When you get a buy signal for the MACD, it is a time to enter. An added rule you might want to throw in: sometimes I like to see a close above a day or a few days highs for a further confirmation. Words are one thing, but let's go to the chart. This is the infamous COVID-19 sell-off. The CCI indicator was hitting lower lows. But this would not be a time to buy at this level over here. We would wait for an initial MACD signal. So while we hit a lower on the CCI, it just told us to watch, and we watched as it went lower. Then suddenly we got a MACD buy. This MACD buy was confirmed by closing higher and also holding the lows, which just sent us off into a huge rally. Again, CCI was the, let's look at this. Soon it will be time to buy. MACD, the trigger. Confirmation. An easy series of events, but a very powerful series of events. For the best results for the CCI indicator, combined with the MACD, is the initial breakout. The initial breakout is usually the most violent upswing, and the shorts are covering and people are buying into it. So again, initial breakout is what we're trying to look to find. Best results. CCI histogram turns positive. Once the CCI crosses above the zero line to the positive, it is a further confirmation of the entry signal buy. CCI above zero indicates price is above historic average. When trading above zero, the current price is above its historical average. An emerging bullish trend would be going from a negative or near zero readings to 100 can be used as a signal of an uptrend. So CCI turning positive on a histogram is further confirmation of the buy signal. Some investors and traders base their whole system on crossing the zero line. We can do further buying crossing the zero line, but the initial buy, I believe, will show best results when using the MACD. Best results. Stay above zero to 100. Confirming a bullish trend during a strong uptrend, the CCI will typically remain above the 100 level. It must remain above the zero level. Staying at higher levels confirms the strong trend, and by staying away from falling below the zero readings, shows a bullish move. Exit a trade. Protect the profit. The increased volatility in the stock market is a two-edged sword. On the positive side, it gives us a chance to make money even faster. On the downside is that when a reversal occurs, your stock can drop more quickly. The exit strategy will keep your decision-making simple, objective, and unemotional. You also won't have to consistently rethink whether it's time to lock in your profits or cut short your loss. This simplification of the selling process is more important than ever with the market becoming increasingly volatile. You don't want to suddenly sell a perfect, fine, uptrending stock simply because of a whim. In the more likely and happy circumstance that your stock starts to move higher, here's what to do. As long as the stock is above its rising 200-day moving average and the moving average is rising in uptrend fashion, be sure to give it plenty of room to gyrate with using ATR stop loss. We're going to trail the sell stop behind the advancing price. Risk management. The first thing any good trader or investor should do is realize that they must never hold any position without a protective stop loss. These issues can really change direction in a hurry when bad news comes out and the institutional herd starts to panic. The way to protect yourself is by using stop orders. Using sell stops results in a minimum of emotion and misgivings. Best of all, there will be no gut-wrenching decision making. Enough theory. Let's look at some real life examples so you will feel comfortable adjusting to this strategy in the future. Let's start looking at the CCI. If you look back at the infamous COVID days, the CCI was hitting yearly lows, very low readings. Here, and you see it right here. This was only a warning signal. If you just used the CCI, you would have gone lower, 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 lower. Then a MACD buy signal happens. MACD works very well in changing of trends. It does not work very well in a narrow range or just trading back and forth where it's going MACD sell, MACD buy, but it works very good at a changing trend. And then it sets off to the races. The MACD goes up, up, up. We throw out these MACD signals because it's going against the overall trend of the market. We also see that it's trading in a range of 0 to 100, even sometimes happening a little bit higher, which is showing great, great signs. Then over here, it dips. Now you could have maybe taken your profit somewhere here and waited for it to go back over here and rebuy back in, but letting the position run would have been very good also. Staying above always the 200-day moving average and continuing forward. Now, again, paying attention to the overall market is very important. Taking profit sometimes is important, but if you follow the strict definition, you would have run the full QQQ since the COVID days. Works out great. Let's go to another one. Just picking a random one, NVIDIA. Let's go into here. Same thing. Comes down here. The CCI is at lows, very lows, which tells us that we should be watching for a buy. And then it goes up to here. A MACD buy signal. Off to the races. Staying above the 200-day moving average. The line is definitely looking like an upswing. Here you might have gotten out of. Yeah, absolutely, for the stop loss. And then we continue up further from here and maybe a repurchase in. So again, CCI is a watch. Let's watch what's happening. Is it coming to new lows? Is it happening? The MACD, a signal to buy and to jump in. The trigger, pull the trigger. Then we watch some of the other signs. Don't forget also watching the CCI turning positive and use the average true range for a stop loss going back. We cannot finish by not speaking about Bitcoin. Let's just go back a little bit at Bitcoin. We look at here, CCI hitting lows, MACD buy signal. Throw out all the other signs, throw out. And we're off to the races, Then we have another opportunity. Even if we hit these lows, the MACD held, you would have sat 2 months not making money, but then the trend continued up higher. Look at recently what's going on with Bitcoin with the CCI. Right now, we are trading in a negative range. The overall market seems bearish for Bitcoin. We would love for it to sell off, CCI to go much lower, and then a MACD buy signal. This is what I'm waiting for. One of the indicators I use out of over 50 indicators. Key takeaways. The 3 main rules is, first, focus on the macro picture of the market. No indicator will be as successful if you do not get this right. So the top-down analysis of the overall market is important. Rule 2. CCI is a lookout to buy, not the trigger. Rule 3. MACD is the trigger. Initial breakout is the best time to start the system. Protect your profits and always use stop losses. For further explanations, watch our videos on CCI Strategy Explained and Top-Down Strategy Explained. Please subscribe and turn on notifications for our weekly updates on the stock market and cryptocurrencies. You know what I'm going to say. Study it, analyze it, and adapt it.